Next, the market-to-market report.
The gifts of optimism and spec fund buying in the wake of a trade deal moved much of the commodity markets higher. For the week, March wheat gained 14 cents while the nearby corn contract added 2 cents. Bean oil demand added to the trade confidence to lead the soy complex higher as the January soybean contract added a penny. January meal declined $2.50 per ton. March cotton gained 96 cents per hundredweight. Over in the dairy parlor, January Class 3 milk futures fell 27 cents. The livestock sector was mixed. The February cattle contract improved 90 cents. January feeders rose $1.27, and the February lean hog contract dropped a dime. In the currency markets, the U.S. dollar index fell 72 ticks. February crude oil improved $1.37 per barrel. COMEX gold jumped $34.90 per ounce. And the Goldman Sachs Commodity Index expanded 7 points to finish at 440.30. Joining us now to offer insight on these and other trends is regular analyst Tomm Pfitzenmaier. Tom, welcome back.
Thanks, Laney. Good to be here. Good to end up the year.
We have a lot of end-of-the-year questions and big picture things to look at here, but really, I guess a big picture thing and a lot of questions we got in this week on social media, Tom, was dealing with the wheat market. So I want to kick off our discussion today, coming to us from Roger on Twitter. He said the July 2020 KC contract has had a very good rally. Is this time to sell some of next year's crops, or should we wait until after the January acreage report when wheat should have a 110-year low in acres?
Well, it hasn't had a nice run. All three of the wheat categories have had a nice run up here. Maybe there's another 15 to 20 cents. The Chicago wheat maybe back up in that 573 area, which was the summer high. As far as how you play the January report, I'm kind of one of those guys that likes to play both sides of it, so I'd probably sell some ahead of it, especially if we stay up at these levels, and then if you're running the risk here, because a lot of people think that report's going to be friendly. The market's rallied in anticipation of it being friendly. So that always makes me a little uneasy, especially if we continue to do that right up into January 10th. So, you know, if you have a nice rally ahead of time, I'd sell some. None if it's friendly, then clean it up and sell the rest of it. As far as new crop, next year, if you're selling old crop, it's certainly a good time to start sticking your toe in the water and selling some new crop too.
And when you say some, Tom, what are you talking here? 20%, 50%?
I guess to get started, 20 to 25%, and then kind of see how the winter goes. I mean, the Russian crop was fairly decent. We're probably going to have a decent crop. There were some problems in Argentina and Australia, which have been supportive, but the world is fairly well supplied with feed grains. So we're not going to get too carried away. We've had nice short covering in all the grains. And once that's cleaned up, the upside's probably somewhat limited here.
Tom, how are you handling the January 10th WASDE report here in the corn markets? Are you playing it the same way as you are with the wheat?
Pretty much, yeah. The corn market, you can make a case for whatever you want. I mean, if you want to be bullish, you can say, oh, the funds are going to continue to cover shorts. The crop's not out there. The acreage is going to be down. The yield's down. USDA's way off on their numbers, and all that's friendly. On the other hand, the South American crop's good. The USD doesn't tend to be off that much. We're probably going to plant the heck out of corn next year. So how much do you really need to pay up for it? And then you get in the mix the potential China business. Well, you know, they buy what, 4 million metric tons, 6 million, something like that. So they aren't big buyers of our corn. If their hog herds are really decimated like they say they are, I don't know that they need to buy a lot of corn. I think that if they buy anything, it's probably going to be ethanol and DDGs. So yeah, if we rally up, especially if you get March contract to run up in that $4 range, I'd certainly want to have some corn sold ahead of that, especially with the basis as narrow as it is in a lot of areas. I'd probably also step into some new crop. If that should probably pull new crop up in that maybe 405 to 420 range up in there, and I'd probably be a little stronger, maybe up in the 30 to 35% sold on new crop on corn if that happened.
And Tom, finally, how are you handling this report for the soybean markets? They have had a great week this week, really until Friday, where they seem to take a step back.
Yeah, you've had short covering. Again, that's short covering in China. That's basically what's going on there. It's pulled up by bean oil. As you alluded to earlier, bean oil's had a very good week. You've had the Malaysian palm oil hit 3-year highs this week. That pulled it along. You've had some legislation for biodiesel that was supportive for bean oil. So there has been some positives there. The crush levels have been supportive of bean oil. But bean oil-led bean rallies don't generally go that far. So I'd be a little cautious about the bean market. As you said, that market is generally driven by meal, and meal closed down $2.50 this week. So we're kind of getting up to fairly lofty levels. Maybe there's some more short covering that can give that some more. South American weather, even there, is great. So then you're back to what's China going to do? How many beans are they going to buy? Are they going to switch Brazilian beans to U.S. beans to make it look like they've help hit their $40 billion target? If South America has a great crop, Brazilians have a great crop, which is kind of what's happening here so far. And Brazilian beans are a lot cheaper than U.S. beans are. How much are Chinese going to be willing to pay up just to have an agreement and make the two presidents happy? I guess I'm a little uncertain that that's going to go as well as the trade maybe thinks it is at this point. So a lot of uncertainty there, but we've had a nice rally. Granted, we were only up 14 cents this week, but we're 60, 70 cents off the lows. So we've had a nice pop in the bean market, maybe a little more. Another 15, 20 cents in that market too, and I'd guess you're going to exhaust most of the buying ahead of the January 10th. And then we're back to, what's that? How much crop is out in the field? How are they going to count that? Yield, all that stuff, which is a big uncertainty in both corn and beans.
So it sounds like moving past the January 10th report, really the biggest factor is U.S.-China trade negotiations.
That's my perception. I mean, they've got 2 years on this agreement. That doesn't mean they have to go run out next week and buy everything. They can sit and massage the market. They can sit and wait and see if Trump gets reelected. I mean, there's a lot of moving parts to all that, and it doesn't necessarily mean beans have to go to the moon right off the bat. I mean, maybe they will eventually because of their buying, but I don't know that it necessarily has to happen quickly.
Yeah, it doesn't have to happen tomorrow.
Correct.
The other market that seems to be benefiting from the U.S.-China trade negotiations in phase one here is the cotton market. Tom, it seems that we're in an upward trend here. Is that due to continue?
All the things I talked about with corn and beans are certainly true in cotton. Cotton's Chinese driven. Funds have been short that market too, and covering to get out of it. Again, maybe there's a little more up in it. I wouldn't be hanging around too much longer in the cotton market any more than I would those other two markets.
All right, Tom, we've got another question here. Chinese demand is the continued trend, even when you look at the livestock sectors. We've got a question here from Ryan in Dike, Iowa, wanting to know, is China buying enough beef already to push the live market higher?
Well, demand for beef's been pretty good. How much of that's Chinese, I guess I'm not sure. Certainly that's a component, and a lot of that gets funneled through Hong Kong and other areas, so it's a little hard to tell. I'm optimistic the cattle market. I think you can see February run up into the $130 range, but my optimism really more related to winter weather, and invariably you have something in January and February that gets the cattle market wound up. I don't know. My concern on the beef side is they supposedly really need pork, and they haven't been buying pork in the quantities we thought they were going to. So how much are they really going to pay up for beef? I think there's some underlying support there, but I wouldn't rely on the beef market taking off here based on Chinese business. I mean, there could be some up, but you get those second and third quarter June cattle, up, I don't know, another $3 or $4. I think you'd have to start looking at selling those too.
Tom, when you look at the feeder markets, we put in a gap in the January contract earlier this week. Why did we make that gap?
That was somewhat impressive to me, given normally that's an inverse. That feeder market is an inverse of the grain markets, and the grain markets were up, and yet you still had the feeder market. That to me relates back to optimism in the fat market. Now the fats were, like you said, up 90 cents this week, so wasn't like a moonshot. But there seems to be a lot of optimism that the beef price is going to get better over the winter, and I think that's relating back to the feeder market and prompting people to sort of guys pay up for feeders this week.
And as you mentioned there, we've been waiting in anticipation to see if China will buy this big supply of U.S. pork. Starting January 1st, though, they're going to remove those tariffs on U.S. pork. Is that going to be the window of opportunity that we need?
That's what we're hoping. We thought all last fall that their cold storage would be diminished, and it didn't really. That really didn't happen. Now they think that their cold storage will be depleted by the middle of the winter here, and that's going to generate more pork demand. I guess that remains to be seen. The market's really factored in big numbers for a while. We've taken a lot of the air out of the market, so there is some room on the upside. But that's totally what it's up to, because cold storage in U.S. cold storage has actually started to pick up some here, both on the bellies, and now hams were depleted because of the Christmas trend to consume a lot of ham. But if they don't show up to buy a lot of pork, we've got too much pork on hand. So I'm expecting the pork to be range bound.
And what's the range that you're looking at, Tom?
The high of 73 to low to 63, probably somewhere in that range, unless we have some news that breaks us out of that. So the pork market, I was just looking at my charts before I left the office this afternoon, is really overbought. It's right on the verge of turning over here. So if something doesn't show up on the demand side, I'm afraid we're in for a little bit of a correction here over the next 3 weeks in the pork market, and then maybe we can have a run with some Chinese demand showing up in January or February.
And Tom, just quickly before I let you go, is there a sweet spot for where we need to see exports hit in the hog market?
That's kind of a moving target because our production keeps increasing, so they have to keep increasing more to offset our increase in production. So to be honest with you, I don't have an exact number on that, but I'm sure there is one, but I don't know what it is.
It's a moving target.
Right.
That's a great answer. I love that. Tom, thank you so much for joining.
Thanks, Laney.
That wraps up the broadcast portion of Market to Market, but we will keep this conversation going on Market Plus, where we'll answer more of your questions. You can find it on our website at markettomarket.org. Facebook was full of holiday pictures this week, including one of our staff. Find out what else we share by liking our new page's name, Market to Market Show. Join us again next week when we'll look back at the biggest stories of 2019 in rural America. So until then, thanks for watching and have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content.